Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on Bitcoin. In this episode, we're going to be diving into some on-chain metrics, so leave your TA hats at the door. There's not too much to update in terms of the TA. If there's anything major, I'll talk about it tomorrow. But for right now, let's dive into some on-chain metrics. So since my last video, if you did watch the most recent on-chain metric video where we talked about 50,000 Bitcoin being market dumped on exchanges, I did want to highlight, while the numbers on exchanges are slightly curtailing to the downside at this moment in time, the balances on exchanges are still at relatively high levels, and in my opinion, I think all we need is one final push up to really start tanking the price action. And if you watch the most recent video on my channel, This Week in Crypto, you'll understand why this week is going to be extremely pivotal for all markets, your bond markets, your equity markets, your cryptocurrency markets, and I do believe a lot of the important economic data that's going to be coming out this week is definitely going to cause an inflow on the balances on exchanges. So I'll keep you up to date on that, but just letting you know, not too much has changed from here, but we are still at elevated levels. Active addresses. Now, active addresses look like they want to push up right now. We're sitting just underneath 1 million with 940,000 active addresses. If you're new to the channel, warm welcome. We look at the active addresses here in pink because, as you can see, when active addresses start to peak, we had a spike over here in 2017. What did this correlate to? It correlated to the exact top. Then you can see another macro spike over here. What did this correlate to? The first top for Bitcoin. Then we saw another top. You see, this is where Bitcoin topped out at 69,000. What did this correlate to? This correlated to a run up and a spike in active addresses. We then broke down. Price action managed to spike. What happened? Active addresses went up and we continued to spike. Now, this peak over here is a little bit offsetted. You can actually see this peak happened after we started to slide to the downside, but nonetheless, a spike in active addresses, if we look at exactly where this correlated to, it correlated in a further capitulation to the downside. So a spike in active addresses doesn't always necessarily correlate to the exact top, but this is a great indicator to look at, to be wary of, because, for example, what do the active addresses mean? Well, it means that you've either created a sender or a receiver address in the network. Let's say, for example, you want to sell your Bitcoin, right? You want to sell your Bitcoin at 69,000. How are you going to do that? You might have your Bitcoin in a Trezor, you might have it in a ledger. You're going to send that, create a sender address, and you're going to send it to Coinbase or Binance or KuCoin or wherever you're sending it to. And that exchange wallet is going to become a receiver wallet. So, when people start selling, it's normally at the top. Well, it is at the top because, for example, at the tops, there's more sellers than buyers. It really is as simple as that. So once again, just a quick update on the active addresses. Active addresses are heading up at very elevated levels, not really good for the price action. And also, if we look at the active address sentiment indicator, we're pushing up to slightly elevated levels. We've been at lower levels, we've been at higher levels, but we are kind of pushing up there, especially with the active addresses. Now, Whale Shadows, looking at the revived supply, basically from OG wallets. I only really care to look at what's happening in the 7 to 9 year and 10-year plus wallets. But let's zoom in and see if any of the shrimps are doing anything major. And yeah, not too much has changed since our last video. 10,000 Bitcoin was deposited from some 7 to 9 year plus wallets. And ever since then, very, very small movement from some of these OG wallets. So the reason we're looking at this is to let you know that it's not particularly OG wallets that are selling right now, but who is selling right now? Well, it is the wallets with more than 1,000 Bitcoin. Since I last left, since we last did our last on-chain metrics update, since we last did our last whale watching update, we've had a monumental swing to the downside in terms of these whale wallets. We went from about 2,750 approximately since my last update, all the way down to 2,045, and we went down to as low as 2,040 over on December the 8th. So at this moment in time, the whales, the institutions, the smart money, they're currently selling, and more or less, if we look at the market structure in the past year or so, once again, they sold at 46,500. They didn't sell the exact top, but they sold more or less at the top. And then ever since then, they were selling. And then they've basically been on the sidelines. So this has been honestly one of the biggest drops we've seen in whale wallets in quite some time. And you tie this with my previous video, This Week in Crypto, when we've got a lot of economic data coming out this week. Maybe they know something we don't. I don't know. I never claimed to be an institution. I never claimed to be a smart money. I never claimed to have more than 1,000 Bitcoin. What I do claim is to follow the smart money and do the opposite of retail traders. What are retail traders doing right now? Well, they're still drastically accumulating. We talked about this on the channel. I won't dive into this too much. They started buying around about 40,500. But when we look at the price action, they weren't interested in buying at 10,000, 11,000, 12,000, 20,000, 25,000, 35,000, 30,000. They started buying at 40,000. And ever since then, they've been accumulating. And as we know, looking at the price action, 17,100 right now. If you've been following the retail, you probably haven't been navigating these markets too well. If you've been following the smart money, like the Cowboy family, you know that we've been sitting on the sidelines and saying, hey, you know, we don't have all the answers, but we know who to follow. We know who to look for. We know who the institutions are, who the smart money are. We know who sold the top, and we know who's most likely to buy the bottom. And right now, smart money's not buying. It's really as simple as that. So when we pair these two charts together and we get the Bitcoin ratio of these wallets, the smart monies, the institution wallets, and we divide this by the amount of retail wallets, we get the Bitcoin ratio of retail to institutional addresses. Rather, I said institutional over retail. It's the other way around, sorry. It's the retail to institutional addresses ratio. You can see how it's calculated here. Retail wallets divided by institutional addresses. And when we do surmise this calculation, we get this blue line here, which is very simply just the ratio of retail to institutional addresses. When this goes to the upside, it's a sign that retail traders are becoming far more involved in the market than institutions. So when we look at, you know, what happened when this ratio goes to the downside, this bull run happened when this ratio started to go to the downside. Why did this happen? Well, think back, what happened in 2021? Tesla bought, Michael Saylor bought, a lot of smart money started piling into these markets, and this is when the institutional money started flowing in and the ratio went to the downside. And then once again, we see this bottom round about the 46,500 mark. What does this correlate to? This pretty much correlates to when smart money started selling out of the market. And this almost correlates to when retail started buying. So basically, when institutions were done buying, you know, 50,000, 60,000 or so, they started selling. And then that's when you started seeing all these people, you know, try and convince retail to come in. You saw all of these quote unquote gurus saying Bitcoin is going to 100,000, 250,000 this cycle, 500,000 this cycle. We're in a mega cycle. We're going to $1 million this cycle. And obviously, that was just a sham. Obviously, institutional money, they had done accumulating at that point. You know, 46,500, they were done accumulating. They started selling out of the market. They started selling to who? Well, they started selling to retail, which is still drastically accumulating. So, ladies and gentlemen, as this ratio is continuing to run to the upside, like it has been since my last video, it's taken a relatively healthy run to the upside. This is once again another sign that institutions are quite not ready to dive into the market, but retail are very happy to buy the coins while smart money sits on the sideline. Now, that's pretty much all the important data that I wanted to share with you for this video. I did also want to highlight that the hash rate is taking a very, very nice bounce back up to the upside. Bear in mind, this is a extremely bullish indicator, but you have to remember this is a indicator for the higher time frame. So, I mean, once again, let me show you what I mean. Let me reset the price action just to show you that this is not something that you want to be looking at in the immediate short term. So the hash rate has been taking a huge run up since Bitcoin was 33,000 and now we're at 17,000. So once again, just being a realist over here, hash rate going up is extremely bullish for the higher time frames. It means there's more miners competing for the same amount of Bitcoins. It means the network is more secure. It means the network runs more smoothly. I could go on. Hash rate going up is an extremely bullish indicator. However, it happens in the higher time frames. In the lower time frames, it doesn't mean too much for the price action, but Hashraman's indicator, this has caused a lot of capitulation so far. I mean, we talked about this in the previous video over here, major capitulation in 2018. I don't like to use this for black swan events because when you are looking at the Hashraman's indicator, you're looking at a 30-day moving average and you're looking at a 60-day moving average. So if you're looking at what happens during, you know, the March 2020 capitulation, it will have fired a incorrect signal because, you know, we basically broke down and we were back at the same price within a month or so. So when you're using a 30-day and a 60-day moving average, it's not going to capitalize on these smaller moves to the downside, but you can see a lot of these macro moves have happened due to minor capitulations. I do still believe we do have a minor capitulation coming around the corner. I'm going to make a video about this. It also very much ties into the stock market. I know, very, very boring. No one wants to talk about, you know, CPI, stock market indicators, mining profitability when we're talking about Bitcoin, but all of these things tie in together. How is the hash rate going to go up? I mean, we've been looking at a lot of, over on Twitter, we've been looking at news articles recently of a lot of mining companies. They're like mining firms. They're starting to go bankrupt. They're starting to default on their loans. They're getting these crunches where they no longer have enough money. Bitcoin's not profitable enough. The amount of Bitcoin they're mining is, you know, diminished compared to, you know, 6 months ago, a year ago, because tons of miners have started buying equipment and, you know, once again, with the price of energy going up, we can confirm this. Go look at any CPI index and you can see energy and food are the two highest categories in the CPI, with energy absolutely towering over everything else. So with this, it's no surprise that, you know, depending on where you live in the world, like once again, I said this in the last video, if you're living in Africa and you've got, you know, huge heat rays blasting down on your country, if you live in El Salvador and you're getting that volcano energy with a discount for mining Bitcoin, then good for you. But for most places in the world, mining profitability is going down, the cost of energy is going up, the cost of mining equipment is going up, the profitability of mining Bitcoin's going down, and the price is going down. So more people are mining and competing for the same amount of coins, and you know, people aren't getting the same amount that they mined, you know, a year ago, and the price has gone down like 75% since then. So I do still strongly believe a minor capitulation is happening. I do believe at some point the hash rate is probably going to take a nasty plummet to the downside. Hash ribbons indicator is going to take a nasty plummet to the downside. I do also believe this is going to correlate to a lot of bad economic data that we do have coming in, which I did talk about in my most recent video. This can take a while to play out. Do bear in mind things like the hash ribbons indicator when I'm talking about mining profitability, cost of energy, firms going bust because they're defaulting on these loans. These are all extremely higher time frame indicators. But what's happening in the lower time frame, looking at what whales are doing, whale shadows, you know, what are institutions doing at this moment in time, and comparing this with something like retail, this is definitely something to pay attention to in the short term, and especially active addresses. Active addresses are still pushing up. Whales are still selling, retail still buying. It's pretty much all I've got for you for this episode, my friends. I definitely will look to make a TA video on Bitcoin tomorrow. I'm not going to have too much to talk about, which is why I didn't want to make an extensive video on this today. I say this in a lot of my videos, but I really do appreciate all of you who do watch my content. I appreciate the time that you spend watching my videos, and I know that you appreciate the time that I put into my content. So I appreciate my time and I appreciate your time. If there's not too much to talk about for Bitcoin, I'm not going to waste your time and make a video for the sake of it. As you can see, literally for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days, we've been the same price. So I'm not one of these people who's going to make a daily upload when we're the same price every single day. When something changes, I will update you. If you've watched my previous video 5 days ago on Bitcoin, if you've watched my last video on the stock market, which has beautifully played out, we talked about the pump before the dump, and that is perfectly played out for the stock markets. I will be updating you on the stock market tomorrow. There is tons and tons of stuff that I want to talk about for the stock market, and unfortunately not too much that I want to talk about for Bitcoin, which it's a shame. It is what it is though. If you look at my stock market videos, you know, they get 300 views, they get 500 views. You compare these to my Bitcoin videos, you know, Bitcoin videos get twice the amount of views, Cardano videos get twice the amount of views. It is what it is. Stock market is very important to keep your eyes on, and I'm going to keep on updating it even if the videos are more underappreciated than Bitcoin. But that's all I've got for you for Bitcoin today, my friends. Apologies for being a little bit inactive this week. I've had an extremely busy week. I'm going to be taking the day off tomorrow so I can get a ton of these cryptocurrency videos out and, you know, stock market videos out. So I'm going to not do too much tomorrow apart from make a YouTube video. So see you tomorrow on YouTube. If you want to know what I've been doing, I mean, go over and check out my Twitter. It's a little bit more personal. But yeah, that's all I've got for you today. Cowboy out. Peace.